Welcome everybody to episode 12 of the Ape and Bird NFT show, coming to you on the 28th of July. Steve has the man flu, so you're going to hear, unfortunately, maybe a little bit of coughing. And if you're watching on video today, apologies, Steve has probably just rolled out of bed. So welcome, Steve, to episode 12.
Thank you, Greg.
Good luck getting through today. And we also have our first guest to the show, Shane Brunette from CryptoTaxCalculator. Shane, thanks for joining us today.
Thanks so much for having me, Greg, and thanks, Steve.
Yeah, thank you.
No problem.
So what we're going to do today off the top, and we've sort of previewed this over the last week or two, is we're going to get into some conversation around everyone's favorite topic, tax in crypto, with Shane just in a minute. And then Shane's going to leave us after about 20 or 30 minutes, and Steve and I will get into our roundups of all things in the NFT world later in the show. So Shane, just by way of introduction for the listeners, can you just tell us a little bit about your backstory in this crypto Web3 space and how CryptoTaxCalculator came about?
Yeah, certainly. So I actually started off in a totally different venture. I was trying to work on a decentralized exchange for secondary markets for actual startups based in Australia. There was a rule coming out back in 2017 around crowdfunding legislation and making that more accessible for retail participants to get into investing in actual startups. And I thought that was quite interesting, rather than, putting money into an ICO, which were largely backed by these, vaporware style companies. You could build a secondary market within the Ethereum ecosystem and ideally work with regulators to make that legitimate market for actual startups. Heaps of problems with that from a regulatory point of view. There was no way the government was going to do anything like this at the time. That became pretty obvious once I started engaging with regulators. But yeah, was left with my own tax nightmare, I suppose, just from that phase in my life. I really wanted to build something genuinely valuable in the space, and I thought that the pain point around crypto tax was real. It was one thing to be able to do your taxes if there was a centralised custodian to provide you with that transaction history, but what happens when there wasn't any financial intermediary in the first place to give you the transaction history? So if you're actually trading on a DEX, or you're doing NFTs, games, that type of thing. Actual true crypto native experience where you're interacting with your wallets on chain, making on chain transactions. Vitalik or Satoshi's not going to come along at the end of the financial year and give you your tax report. You're going to have to scratch your head and try to work out for yourself. It's like, be your own bank type of thing. Well, the bank provides you with this handy thing called a bank statement, which is useful when you go to do your taxes, and you don't really have that in the crypto space, at least when you're trading on chain. So our job's kind of, to pull that data all together with your obviously centralized exchange activity, because you need the full picture, and then you can, take that and work out your taxes, essentially.
Yeah,
fantastic.
So it's
Sorry,
interesting. Greg. I was just going to say it's a very interesting point, and often how many startups happen is, your own personal pain points become the project that you build. Talk us through, Shane, how long has it actually taken you to get the product to where it is today?
Yes, I mean, we've been working on it for 4 years now, like greater than 4 years. It's a massive project, actually. You just got to think about all the different things that you can do in crypto and the size of the ecosystem. So the amount of integrations that we have now is pretty wild. And also the complexity around actually accurately reconciling a transaction history is quite challenging. And the flows, the user flows, etc. It's really quite a lot of discovery process in terms of how do you help users go about reconciling their transaction history in the first place, because it's a lot more complex compared to other situations that we usually see in accounting space, because often there's especially like NFTs are a good example here. Like one-to-many transactions where a cryptocurrency for many NFTs, like exposing one cryptocurrency for many NFTs, or like combining two shoes to get a new one, that type of thing. So you've got these combination of assets within one transaction, and even the fees, the gas fees, is like a third currency fee. So you just do a simple trade on a DEX, and it's like swapping Google stock for Apple stock, but then paying for the fee in Tesla stocks. It's
Yeah.
it's a painful process, and then you try to get an individual user to like go through that reconciliation process. At the end of it, it's challenging. It's a very challenging problem. So
Exactly. Yeah. So personally, I've been in shares and crypto for a long time now. And so shares are easy. I use a program called ShareSite, which I guess is the stock version of CryptoTaxCalculator. And they give me a report I send to the accountant at the end of the year. So simple. And crypto was easy up until probably 3 or 4 years ago, because you were really only either buying and selling a token. But then we had this whole DeFi summer where now you can stake, earn yield, all this other stuff, and it has got extremely complicated. I'm glad you've created the program. I have signed up, but I do have, I think it was 2,300 transactions to go through and figure out exactly what they've done. So I'll be doing that over the coming month. But yeah, Greg, continue on with some questions.
Yeah, no, I think, Shane, it'd be great, and there's probably going to be a lot of people watching and listening today. And Shane, I might actually get you just to move your head a little bit to the left so that you're in. Yeah, I can just see that the camera view, for those that watch a YouTube version now, you can sort of fully see Shane. Got a great array of books there on the behind him. But Shane, just talk us through, for those that haven't used the product before. I mean, what would someone expect if they're going to your website, to whether it's to use a free trial or to sign up for the first time? What type of experience should they expect, and what type of information do they need to sort of dump in? How complex is it for a first time user is probably my question.
Yeah, so it's not actually as overwhelming as some people might assume. All you have to do is obviously create an account, and then you add in your public wallet address, so no private keys, clearly. You'd add in your public wallet address of the networks that you've been using. So say you've been trading on Ethereum and maybe Solana, etc. You can add in those public wallets, and then we'll pull in the transaction history against those wallets. And then you can connect to your centralized exchanges, so your on-ramps, off-ramps, all that type of stuff, into the app. Importantly, you want to connect all your data so that we get a full picture of all your trading history. Because you need to be able to think about the cost basis and the transfer of the cost basis between exchanges and wallets, etc. And once you've got this all connected, then you get essentially a view of your entire transaction history across time, that's in fiat denominated value, so say in Aussie dollars, or if you're from the US, USD, etc., whatever your local currency is. So everything's already mapped back to that local currency, and then you can click through and actually see how the capital gains or the income, etc., is being calculated. You can see what other transactions are kind of being grouped together as part of that capital gain. And so it's quite detailed information there, so you can kind of go through and work out and transparently see how the calculations are actually being generated. And then once you're happy with everything, we've actually got a reconciliation engine, so you can, anything that's not reconciled, like if sometimes there's not enough information for us to ascertain what the trade category might be, etc. But then you can go in the reconciliation engine and it will give you some suggestions as to what to do. For example, you might have received a bunch of spam tokens. Often NFT holders are victims of receiving spam tokens. So we're actually able to isolate that in the reconciliation engine, and you can just, view all the transactions that are suspected spam tokens and then mark them as spam, and then they'll be ignored. This type of thing. So it's like a pattern matching algorithm. And then once you've gone through, reconciled everything, you're happy with the transaction history, there's no more warnings, then you can generate these reports, share them with your accountant. They're in terminology that the accountant should be pretty familiar with. So you don't have to explain to them what pancake swap is, and you're staking egg token pancake swap and earning bananas, whatever. And then so and then that's pretty straightforward at this point. The idea behind it is, it's a subscription-based service, and the idea is here that you just keep it up to date, just maybe once a month or something. Ends up being a whole lot easier once you do keep it up to date, rather than trying to come back later, or even 4 years later, and trying to work out what you were doing. That could be painful, but once it's up to date, it's really valuable because you can see trading history in real time. You get a good understanding of, what are your profitable trades, etc. It's almost like a trading diary, which is a really good strategy for successful traders, is to keep a trading diary. And then you can get real-time understanding of what the tax consequences might be, what your current tax exposure is. You make sure that you can do some tax planning there so you don't get yourself into a situation where you actually owe more taxes than what your portfolio is worth, which surprisingly can happen, and has happened far too many times that I would like to have seen. But we see that quite a bit.
Yeah, what are some? We've actually got some questions that have been pre-submitted by our listeners, Shane, and we're going to throw those to you just in a second. I think you just answered one of them around spam NFTs that are often airdropped, and how those are treated. And you've obviously said that there's sort of an ability to disregard those in the back end of your system. What are some of the misperceptions or common misperceptions that people have around crypto and tax that you sort of hear from customers and alike?
One massive misconception I'd say is that I don't have to do my crypto tax. No one's going to notice. How they are going to know? I'd probably say that's actually probably the most common misconception. I don't want to be the bearer of bad news here, but if you've been doing any transactions, particularly if it's on chain, it's not anonymous, it's pseudo-anonymous, and what that means is that it's mapped back to your KYC. There's ways of tracking down your IP address, because when you publish a transaction request, it goes through to another node, which can often see that IP address, etc. There's all types of techniques out there to isolate your wallet and find out where it is and who it belongs to. And then you've got your trading history there for the rest of time, because it's on the blockchain, it's immutable, it's transparent. So you've got a better chance of, I like to say, you could walk outside the ATO head office there and write your transaction history in the boulder out the front, and they've got a better chance of not seeing it if you do that. But yeah, if you're doing this on the blockchain, everything's just there, readily available. It's just a matter of time before they've got the capacity to investigate. I back that up with the second misconception is that, the government's never going to be smart enough to be able to do it in the first place. It's like, there's a ripe private market out there, and the government tends to privatise a lot of this type of activity. And there's already services out there which accommodate traditionally around KYC, AML, like anti-money laundering, terrorist type of stuff, to help with tax fraud, that type of thing. These types of tools are what would be used to do these audits. So
there you go, listeners. If you were thinking of dodging the tax system, I think Shane's just wrecked you in about a minute and a half there. So that's fine. I think that's something that most people are aware of, Shane. So thank you for sharing that. So let's hit you with a few specific questions, Shane, from our listeners. You may have the answer for some of these, you may not, but we'll throw them to you, and you can see how you go, unless you've got one you want to throw in there before Steve.
No, I just think this is your one chance where your spiel on not tax advice does come into play. So maybe read that out before we go ahead.
We do have a regular disclaimer here, Shane. So, yeah, we will say, as we say every week, the hosts and our guests, like Shane today, discuss all topics and products on the show for entertainment and educational purposes only. From time to time, the host will refer to NFTs, protocols, and other items by the way of example, but it's not to be construed as endorsement or advice. You are responsible for doing your own research and seeking your own independent, professional, legal, tax, financial, and accounting advice with respect to any investments with digital assets and NFTs. So, with that out of the way, Shane, let's ask you let's ask you the first question from one of our listeners. So there's a bit of a tangible example here. This person has said they bought ETH at 3,500. They bought an NFT at 0.08 ETH. They sold the NFT for double the ETH at 0.16, but when ETH was only at 1,000. When do you crystallize the loss?
Yeah, so I mean, what happens when you buy the NFT, whatever you bought it with, for example, the cryptocurrency, the way that the ATO kind of sees this is really, you can easily think about this as like a virtual AUD transaction happening between every transaction, so every trade, sorry. So if you go and sell ETH for an NFT, the way most tax authorities look at this really is it's more like selling ETH for AUD, so basically cashing out, and then putting all that money back in to buy the NFT. So you've got a tax, you've got a tax exposure from when you disposed of the ETH in the first place, right? And whatever the gain or loss is on that ETH is something that you're liable for, because effectively it's like you just cashed it out into your bank account, right? And you've got the Aussie dollars right there. Of course you don't, you did a transfer directly for an NFT, so you never actually saw the Aussie dollars, but the ATO doesn't care. The ATO's perspective is that, well, you could have cashed out into your bank account and kept some money aside for taxes, but you didn't. You put everything back into the ecosystem, into the NFT. And so you've decided to take that risk that maybe that NFT now collapses to $0, but you'll still have the tax on the gain of the disposal of ETH. Now, if that NFT does crash down in price, either to $0 or 50% down, then you go and sell that NFT, for example, if it's worth half as much, well, then that's when you've crystallized the loss on the NFT, because, for example, you might have a $1,000 cost basis when you first purchased the NFT. Now it's worth $500 when you go and sell it. Fairly simple equation to work out there. You know, you've got a capital loss of $500 in this example. But the idea that the hack here is just to think about between every transaction you're ever doing, there's most likely going to be some sort of pseudo virtual AUD transaction. So just imagine if you just cashed out into your bank account and then put it back into the ecosystem, even if you're doing it directly, the same tax implications are still there. So it's actually quite easy.
So in this case, there are actually 4 transactions. There's the ETH to NFT, the there's only 2. So there's the ETH to NFT is one transaction, and then the NFT to ETH is the other, or is it 4 separate transactions?
Well, I mean, you've got the initial purchase of ETH, so that would have been one transaction. So maybe you bought ETH for $100, right? So that's one transaction. So now your cost basis of that ETH is $100 because you bought ETH with $100 worth of Aussie, and then you go and sell the ETH for $1,000. So, and you traded it for an NFT. But from the ATO's point of view, what you've gone and done is sold the ETH for $1,000 Aussie, and made $900, and then you've gone and bought an NFT with $1,000 Aussie. You know what I mean? And you haven't set aside any gains for tax. You've just put it all back in. That's their perspective. And then once that NFT goes down to say $500, and you cash out the NFT, well, in this case, you're talking about cashing it back into ETH, well, then that's a capital loss there. You know, you've lost $500.
And so on CryptoTaxCalculator's end, do you guys sort of take, the price of ETH throughout the entire history of the year? So when it sees that I bought an NFT at this time and sold it at that time, you can link the exact gain at that stage and the loss or gain at the end?
Yeah, exactly. So we've got a minute price of ETH, for example, so we can actually work out what the market value is of ETH. according to popular exchange such as Binance, etc.
Okay.
You've
Perfect.
Value. So you're always generally marking the NFT against something that is liquid, such as ETH. It gets more complex when you're transferring one NFT for another, and you got to try to track, what's the value of the NFT at that point, because there isn't a liquid market anymore. But in the ETH to NFT example, that's quite a simple scenario where you've obviously got the price of the NFT in ETH, which has a price in US dollars and AUD and all types of currencies. So.
Shane, we've got a really easy one for you here. Someone has asked, when dark mode for CryptoTaxCalculator?
Soon. Yeah.
Soon. There you go. There's some alpha for you. We've also got
more exciting is the mobile app, which has dark mode by default. So.
Right. Okay. Very good. So we've also got a question here. I think this one might have been one from you, Steve. Asking about gifting NFTs, Shane. So, Steve, I might throw this one to you, given I think this one was your actual question.
So actually moving on from when you sell or say it goes to zero. So I've got a couple of questions here. Early on, I was trying to get a lot of friends into NFTs. So I would actually tell them to set up an account and I would gift them a couple of NFTs. So how would tax play on that? Do I crystallize a loss there as I haven't made any money from gifting these? And then the second question was, burning them. If just say there's no market, I bought a project, it was a rug pull, there was zero, no one's willing to buy them. Is it possible to send them to a burn address, and then if I keep them in the wallet, can I claim a loss on those? So a few questions there. Sorry, Shane.
And definitely not tax advice. It's only worth talking to an accountant about this, but I'll give you some information to talk to the accountant about. Like this idea of gifting a token, that's actually really, really complex tax rules around gifting, and there's certain grey areas about cryptocurrency as well, because is it property, etc. Like, how does gifts get treated here? A lot of the times, gifting is kind of used as a way of having to avoid paying taxes theoretically. But this isn't, you're probably not gifting it to a charity or anything like that. If you're just gifting it to your mate, it could very well be a disposal. You better hope that you're getting the market value back from your mate, because that's what your tax obligation is going to be based on. So that's one thing to think about. And obviously, before you do any of those types of transactions and give away all your money to your friends, you should be thinking about what the tax implications might be and have a talk to your accountant about that, because you might be caught off guard, unfortunately. If the market value of a token is $0 at the time of disposal, then arguably, that's the price that you lock in when you disposed of it. So if you're sending it to a burn address and there is no market, so you've sent it to a burn address, you can't recover it anymore, it's gone effectively. I'd say, in my opinion, that's kind of locking in a loss at the $0 price point. Again, you can get advice around this from a tax professional. If you do get advice from a tax professional, that's always going to make the situation more, your position more secure, I suppose. So it is worth doing, especially if it's significant sums. Like, there's these like Terra, for example. You might be holding bucket loads of Terra or UST right now, and it's actually worth nothing. And then you really want to make sure that you realise the fact that it's worth nothing. And so, if you've got $1 million, it's probably worth getting written advice from a tax lawyer on that, for example, just to back that up. But, there's strong arguments, right? In my mind, you can't even access the funds anymore if you send it to a burn address. So.
Yeah, and my accountant I have talked to him a lot about all of this, and he has said what we can do, because there are no clear rules yet, and I've heard you mention that the ATO is going to have a lot of clear rules maybe in December of this year, but he's mentioned that you do the best you can, you show your work, And then if they ever come and say, look, what happened here, you can explain your thinking and which part of the tax code you used to come up with that. And then they will try to work with you on what you've done right and wrong there, because it really is such a complex issue with very little guidance at the moment.
Yeah, exactly. And if you're approaching the subject with good faith, that makes the world of difference, right? I think the ATO is much more interesting as people who are trying to evade tax, or purposely minimise it or obfuscate their transaction history. These types of scenarios, this is where the problems are.
Yep. And moving on, I had one more question from mine, and I think a few others asked this as well. So I owned a Bored Ape. We got airdropped a token. My question is, and I've heard different stories on this, how do you deal with an airdrop? Do you have to pay tax straight away on the worth of it? But then in saying that, what is the worth of it? Is it the first ever transaction? Is it a weighted average over the first day? Or is it seen as a sort of zero? And then once you do sell it, you have to pay tax based on whatever profit you made there.
Oh, that's the $1 million question, isn't it? ATO guidelines, they say that you're meant to market to the market value at the time of receipt. I think that's what the wording says anyway. Notably, they update this quite a bit. Actually, I looked at it 29th of June at the very start of the tax season. It markedly changed this page. They've actually got heaps of details about proof of stake now and what staking is as a node validator. So they seem to be really making a difference between staking and actual staking a node, staking and adding liquidity and receiving staking rewards. By Diverge, what's the market value of the airdrop when you receive it? I mean, that's something that you'd have to work with your accountant on to build up an argument as to how you got to that market value. I mean, if there's an open market on a legitimate exchange, well then that's probably how you should be deriving that price, and probably some sort of consistency is very important there. So you can't go and say, okay, well in this instance I'm going to pick by the minute price because that was really low compared to the daily average, but on this other token let me go and pick the daily average. I'd say whatever method you use to value these tokens, you want that to also be consistent over time. That's also probably very important during this process.
Excellent. So a couple more questions we've got for you, Shane. One from Big Will, who's an NFTs holder. So shout out Big Will. He'd like to know if there's any clear benefits for someone working full-time in the Web3 space to be set up as a business for tax purposes. This might not be something that you can necessarily give direct advice to, Shane, but that's one of our questions for Big Will.
Big Will. I mean, maybe, especially if it's significant sums of money. There's all these tax structures in Australia, there's lots of them. There's this idea of, setting up a company and receiving money into that company and then paying yourself out in dividends over time. But then there's there's a personal income, and then you can't do that anymore. So it really does actually really depend on the individual circumstances. That's where some solid tax advice comes in super helpful, because you could potentially structure your activities in a way that does minimise your tax liability with the right advice. So I think the information that you're going to get in the podcast, the right information here is go out and seek the advice around this, because there could be significant savings to be made, but it will depend on the individual circumstances.
So another one from Big Will, and I think you've answered this before, Shane, but we'll just reiterate for listeners. So, do NFTs that I've bought and held essentially not exist for tax purposes? Well, I think Shane made the statement before, and the response that Big Will, in your case, let me see if I can answer this, and you tell me if I'm wrong, Shane. But in Big Will's case, where he's bought an NFT, he's held it, but he hasn't sold it. The tax liability could be the difference of what he's bought ETH for, if we're talking about an NFT on the Ethereum blockchain. So, Big Will, if you've bought Ethereum, say, a couple of months ago when it was, $2,000 and it's now worth $4,000, this is obviously not a tangible example of the markets and the times we're living through now, you would be liable for, essentially a $2,000 increase there. Would that be right, Shane? So he's got to pay tax on he bought ETH at 2,000, 1 ETH, and he bought an NFT for 1 ETH. But by the time he bought that NFT, Ethereum had moved from 2,000 to 4,000 Australian. So there's a $2,000 gain there that he would be liable for tax. Is that correct?
So you've got the gain on the disposal of the cryptocurrency that you used to buy the NFT in the first place. That certainly could be true. But again, there's individual circumstances that can arise here. So, for example, going back to Big Will, since he seems interested in setting up this activity as a business, if you do set yourself up as a business, then depending on the structure, trading stock rules could apply. So this is similar, even if you're not set up as a business, but your trading activity makes you fall into what they deem as a trader. And in that case, you've got to take what they call like inventory stock. It's kind of similar to how they do it at a supermarket like Woolworths, where they have the end of financial year stock take, and they try to find out what the value is of your inventory at the end of the financial year. So, for example, if you had many NFTs and you're seen as an NFT trader, and one of those NFTs was a Bored Ape, then maybe at the end of the year it's gone from $10,000 to $300,000. Even though you haven't sold it, the inventory stock has gone up, so you could be taxed because of the increase in valuation of the inventory stock, even though you haven't sold it. So again, individual circumstances apply here. Definitely worth importing your data, all of the data, into a tool like CryptoTaxCalculator that can understand some of these nuances from a bookkeeping perspective. And then once you've got all of this sorted out, nicely categorized, etc., then you could go down to your accountant and have a talk to them about individual circumstances and see exactly what report and what rules apply to your individual circumstances. But if you do as suggested there, then you don't have to pay the accountant for all the bookkeeping work. You're just going to have to get the actual tax advice off them, which is what they enjoy doing, and it's actually beneficial for you.
Absolutely. Thank you for that response. So we've got one from, I'm going to probably butcher Dean's last name here. I know he owns a couple of VFriends, but Dean Lewandowski. I'm sorry, Dean. Let's just go with Dean L. If I bought an NFT that is now worth zero, I think this is similar to your question before, Steve, and he's got AKA a rug and nobody to buy that NFT on a secondary marketplace, how can I claim the loss, or can I claim that as a loss if I send it to a burn address?
Yeah, that's there's no clear guidelines on this. But what you want to do is build up a case to substantiate your opinion. There's ways of you going about doing that. One of them would be doing something similar to, sending it to a burn address where you can't actually recover the funds. That builds a case that you have disposed of it effectively. Documenting that there isn't a market value for this NFT anymore, like there is no market price. For example, if there was a chart of the floor price of this this NFT collection, then and it's gone to zero, then you'd be taking screenshots and documenting all of this. You can build up more of a case by talking to your tax professional, getting a legal opinion from a tax lawyer. You can go quite far building up a case here, but that's just about substantiating evidence. Just like any kind of claim when it comes to taxes, the more evidence that you keep, the better, right? Just like
can you also, would you need to burn it, or is it okay if it just stays in your wallet as a zero asset?
The guidelines, there's no clarity there. So, maybe it's better to burn it, you could say. But I don't know. No one knows. But, I would guess that, you know, if you don't even have it in your wallet anymore and you can never get it back, well, that's more of an indication of a disposal rather than, I mean, take another argument here. I go out and buy a painting. I bought it for $30,000 thinking it would go up to $1 million, and now, you know, the guy died, but, you know, it didn't go up in value. Unfortunately, the artist just got forgotten. Well, I still like the painting. I keep it in my room. Can I claim it? Like, at what point can I claim it to be $0? You know, maybe you could. I don't know. It's really, yeah. We don't have a black and white answer from the ATO, unfortunately. But obviously, whatever you can do to try to substantiate the claim, the better. The more you can do, the better.
Yeah, and I think there is a lot of grey, obviously, in this area still, Shane, like there is in regulation, tax code, etc. We're all dealing with new technology here, but I think one of the overarching messages I've been getting loud and clear from you is good record keeping and approaching your taxes in good faith, knowing that you know, we're probably all going to get little bits and pieces potentially wrong, but working with professionals and operating and approaching this in good faith should hold everyone in good stead. Would that be fair to say?
Yeah, absolutely. Just don't be too concerned with a lot of people in this space. They kind of feel like this is quite overwhelming. It's, you know, prefer to put your head in the sand type of thing. But yeah, it's actually not too bad once you get started. So the sooner the better.
So last question we've got, Shane, we'll let you go, and we really appreciate your time today joining us. This one comes from Crypto Charles, so shout out Crypto Charles. Charles has said, per transactions, gains or losses, are we considering the equivalent value of fiat currency at that point of time? It's my first time, this is a long question. It's my first time considering crypto and NFTs and their tax implications, but I would have thought the simplest tax application would be to measure gains and losses when the crypto is converted to fiat. There are so many variables at play in the crypto environment, including how you use the NFT, and it makes for a very messy tax scenario. So I think this is your life every day, Shane. But ultimately, this question from Crypto Charles is saying, I think, you know, when the ETH goes in, you know, and the ETH comes back out, that should be the fiat should be the difference in the fiat should be what's taxed. So this might be a statement rather than a question from Charles.
Or in other words, when will the ATO say that 1 ETH is 1 ETH?
Yeah, correct.
Yeah, I mean, like what the statement basically implies is that, you know, you can be taxed on the difference between what you put into the crypto ecosystem and what you pull out, and whatever that difference is should be taxable because that's, you know, my actual gains to my bank account. The challenge with that perspective is, like, say you take the normal stock market. I have bought $10,000 worth of Tesla shares. It now goes up in value to $1 million worth of Tesla shares. And now I'm sitting there thinking, well, Elon's acting a little bit risky lately. I don't want to lose all my money. I'm going to diversify, right? And diversify into a bunch of banks or whatever it is that I want to buy, which I think are a bit more stable. You know, that's an investment strategy, right? That's that. And in the stock market, like, that's a disposal of your Tesla stock. You pay capital gains on that Tesla stock, and then you go and invest the rest into the other stocks. So if you don't have a situation where, well, you know, if I directly swap my Tesla stocks for Apple, Google, and a bunch of other stocks, then I don't have to pay any tax. That's just not how the tax code works in any other market, and crypto's just exactly the same. I think, you know, the idea here is that crypto shouldn't be negatively impacted from a tax perspective compared to other markets like stocks, etc. But also maybe they shouldn't have any significant tax benefits either. And the ability to re-diversify your funds, etc., without having any tax consequences would be a considerably beneficial tax benefit. And it also really incentivise users to keep their money within the crypto ecosystem, which is something that which you know, aligns with the tax office. The tax office is not interested in you deciding when you want to pay taxes. They want to have very clear rules as to when tax tax outcome does occur.
Wonderful. Shane, this has been really, really insightful. I know I've learnt a few things. I'm sure our listeners have learnt the same. Thank you so much for joining us today. I think we're working with your team on a potential discount code even for some of the listeners and for those involved in the NFTs project. So we'll get some more details for that after the show and let everyone know. But thank you so much for joining us. And yeah, don't let taxes be daunting, as Shane said. Maybe head over to CryptoTaxCalculator.io. Is that right, Shane, the URL?
Yeah, correct. CryptoTaxCalculator.io. Does what it sounds like, helps you work out your taxes.
Brilliant. Well, thanks again for joining us.
Thank you very much.
Yeah, we really appreciate it.
Thanks so much for hosting us. It's been great.
Okay, thanks, Shane.
No worries.
So, Shane, you feel free to just jump off whenever you want. We're just going to waffle on for the rest of the show. So, thanks so much for joining us.
Thanks, mate. Thanks for having me.
So, Steve, that was
That's me and you.
That was good. I learned a few.
That was
things
more
myself.
complicated than I thought it was.
Yeah. I mean, it's I have, similar to you, I have purchased a subscription a couple of months ago of CryptoTaxCalculator, but I haven't done a lot with it yet. But I did start plugging in some figures, a couple of weeks ago, and similar to you, there's a little bit of manual adjustment that needs to be done. I think in your case, probably a lot. But I think it's a pain in the ass. Let's be honest. Right now, there's a lot of grey area. There's a lot of manual handling. There's a lot of uncertainty that I think sparks some animosity and some anxiety amongst collectors and people that have been in this space, because you're sort of having to go back and retrofit things. And we see how volatile the market is. And, you'd hate to be in a scenario where, you think your tax bill is in one range, but it's completely different. So the thing that I remind myself of is, I believe it will only get easier after this year. The first year is going to be the really hard year. So it is going to be a slog, I think, for each one of us. But the overarching messages I got, Steve, from Shane was to, not to do too many dodgy things, not to do any dodgy things, but to be approaching this in good faith and to sort of have a story and a narrative of around the decisions that you've made.
Exactly. Do the best you can. Use the tools that are available. Talk to your accountant. And yeah, you're right. This first year, I'm going to have to go back and make sure all the ducks in a row. And now that I have the software, and luckily I haven't been doing any buys and sells this year or for a long time, very few, but I'll be able to make sure at the end of every month, I might take an hour and make sure that everything's up to date. So the next financial year, it'll be as simple as clicking that button like I do with ShareSite for my stocks, getting the report and sending it to the accountant. But yeah, this first year, because it's so new to all of us, so new to the ATO as well, we just got to do the best we can with whatever advice is out there. And I did listen to Shane on another podcast, and he did mention, as I mentioned before, that there's meant to be a lot more info at the end of this year by the ATO, but that doesn't help if you're doing your tax before then. But yeah, do your best. We'll figure it out over time, and I'm sure we'll hear more from the ATO over the coming financial year.
Yeah, and I think it's quite interesting, even thinking about the explosion in 2021 of a lot of this, me included, happened by accident, right? We were toying around with this whole new world. I've told the story before of toying around and buying NFTs so I could write on a bathroom wall, and I wanted to do these digital unlocks, and tax was the last thing I had in my mind, right? It was all about exploring a new technology. So it's interesting now to go back and try to retrofit all this stuff, but we will get there. So Steve,
exactly. Me personally, I was buying because, like you, I thought the tech was cool, and secondly, I bought with no plans to buy and sell. I like the art. And then, of course, this whole 8 thing, 10K thing came along, and just, the whole world went crazy for a little bit there.
It really did. So let's talk about a few other things that have happened in this week in the NFT land. I mean, not a lot has happened, to be perfectly honest. Your observation is things are getting quiet, very quiet around here. Would that be fair to say?
Yeah, so as I told you, this has seemed like the quietest week I can remember in NFTs and crypto since I've started. And you've seen it in the numbers with NFTs. So OpenSea having their lowest turnover week, lowest number of users, in a long time, in the last 6 months. And just generally on Twitter, there's nothing going on. It's very quiet. It does feel like a ghost town. Up until now, I've thought, no, there's still people working. There's still people interested. This past week has just felt very different.
Yeah, I think for me personally, there's been a bit happening with the oddities, and sort of even in the Proof Discord, there's been a lot of discussion. It's a Discord that I still spend a fair bit of time in. Twitter has been more quiet for sure, but I think also in the US market, we're in the heart of summer at the moment too, so people are a little bit more outside. But I agree. I mean, the volume's back up your thesis there, Steve. So it is going to be interesting, I think, over the coming weeks and months. But we did have a couple of things that were going on. We made some notes of. I want to ask you your final decision, Damien Hirst. Did you keep the NFT or have you gone the physical?
I did keep the NFT. Do you have one?
No, I don't.
Okay, so for those quickly who don't know this Damien Hirst story, a year ago to the day it must be, he released 10,000 of his DOT NFTs. I believe I paid $2,000 for it, and the idea was that you had a year to decide what you were going to do. You could either keep the NFT, and then that would burn the physical, or you could have the physical sent to you, and that would earn the NFT. And we found out yesterday that ended up being, I think, do you know the numbers? I think it was over 5,000 got the physical, and I think it was 4,500 kept the NFT. But the interesting thing there was Damien Hirst himself kept 1,000 NFTs. So he only sold 9,000 of the 10,000. And he said he had gone back about what he was going to do. And now he has decided to keep all 1,000. I wish he had burnt them, because then I would have held a one of 3,500 NFTs. But yeah, for me, it was a simple decision in the end, really. And I'm sure at the start, a lot of people thought the same as me. They had bought it knowing they were going to keep the NFT, and then they've seen this market crash and they've probably lost confidence in it. And then they decided, well, a physical Damien Hirst probably is going to be worth more. But I'm still of the belief that the NFT, his first ever NFT, is going to be worth so much more, have so much more utility as well. And look, if the actual physical was bigger than an A4 piece of paper, it would have made me think again. But I'm more than happy keeping the NFT there.
So we did actually mention this a few weeks ago, and I think the numbers were heavily skewed towards the NFT at that stage. So what we've seen at the run up to the deadline is we've seen a huge influx into people migrating to the physical rather than the NFT. And I think there's a couple of trains of thought there for me. One is obviously being in the market that we're in now, maybe people think the physical is a safer bet. But I did see a tweet the other day that said many people had investigated what some of Damien Hirst's physicals were going for, and apparently there were around 12,000 or something like that. So there was an arbitrage opportunity in some people's minds to get the physical and try to cash out at that sort of $12,000 sort of price point. So whether that's right or wrong, that was a tweet I saw. So good luck to everyone that kept the physical, and good luck to everyone that kept the NFT. Had I had one, I probably would have gone down the same route as you, Steve, and kept the NFT. But an interesting project, and it'll be super fascinating to see what the price accrual will potentially be in the coming years.
Exactly. And I would love to know the tax implications of getting the physical there. But anyway, moving on. You told me that today you had a Skype or a Zoom call with a year 8-9 class to talk all about NFTs. I want to hear about this.
Well, it was definitely Zoom because I think the last time I used Skype was in year 8, and I've definitely got
showing my age here.
But no, yeah, it was a very, very interesting and rewarding experience, to be honest. A buddy of mine is I think the head of middle school at Peninsula Grammar here in Victoria, and he had reached out to me previously and said that there's quite a few eager, enthusiastic students trying to learn about NFTs. And they were year 7 and 8 students, and there was probably, at a guess, 25. You're just dying there, Steve. 25 to 30 students that were on this Zoom today, coming from their classroom, and I just went through a sort of 30-minute presentation around NFTs and Web3, and used a lot of examples that I thought would be good ones, like real world examples. We've spoke about the Wagner United, we've spoke about the Australian Open Art Ball project before, even what Mark Cuban did with the Dallas Mavericks and the Mavs collectibles last year in the season, where you could scan a QR code with your ticket before the first quarter ended and redeem an NFT for that. And if you collected sort of 5 NFTs in a row, you could get upgraded seats and things like this. So we really spoke about a lot of the use cases outside of the speculation of just what a cool cat or a Clone X is going to be worth. But I was really pleasantly surprised about the engagement of NFTs and just how quickly kids pick this up, right? They all put up their hand when I said, who plays Fortnite? And so, having in-game digital assets makes complete sense to them, but being able to own those digital assets is actually something very enticing to them. So they're very used to the concept of digital assets, but they're not used to the concept yet of actually owning their digital assets. So I think all in all, a really bullish sign for me. Actually, one of the kids put his hand up and said, have you heard of, I'm actually going to bring up this project name because we'll give him a little shout out. The Bussin Bananas, so spelt BUSSIN bananas. So we're on OpenSea. I don't think there's been a sale yet, but I got to say I've seen a lot worse NFTs over the last 18 months than the Bussin Bananas. So the enthusiasm from the kids to learn, the curiosity about the space. There's definitely, even at year 7 and 8 level, a few questions that we get all the time of what NFT is going to go up in price. We definitely got those ones too. But all in all, a great experience, and just, sort of makes me more bullish on the space. When I zoom out and think of 2030 and beyond, there's just really, it's hard to conceive a world where, digital assets, NFTs are not part of our daily lives. So yes, I did go back to school today and I talked NFTs.
How many of them knew about Bored Apes?
I didn't ask that question in particular, but if I had to take a guess, I would say probably nearly the whole room probably were aware of a Bored Ape. Maybe not all of them were aware of the actual story and how they blew up and, the cultural significance of them. But yeah, from what I could gather, there's a core group of students, maybe about 6 or 8 of them, that are constantly talking about NFTs, and then there was another sort of 15 to 20 people in the room that were coming along to hear a little bit more. So shout out to all the students from Peninsula Grammar that joined that session today, because I believe some of them actually listened to our show, Steve, which caught me off by guard. They
crazy
podcast listeners, year 7s and 8s. So shout out to our young listeners there. Appreciate you.
Yeah, look, it's definitely my thesis, and why I've been buying cryptocurrencies and NFTs now. They're digital first. From when they're 2 years old, they've got a digital item in their hand connected to the internet. There is no doubt that they're going to value these digital assets just like we value non-digital assets. So my whole thing is I always play the long game, and in my mind, there's no doubt that these kids, when they're older, when they have disposable income, if they've got a choice between a physical and a digital thing, they're much more likely to want the digital thing and value that higher. So we'll have to see in 10, 20 years when they're a bit older, but that's the thesis I've been working off as well. I wanted to hear, I haven't looked into this enough, but there was Ledger, which secures all our crypto. They had a NFT drop, but I didn't pay much attention to it. Did you have a look into this, and can you explain what's happening?
Yeah, I entered a pre-mint raffle through the Proof and Moonbirds Discord. Unfortunately, got on the wait list, and I think it minted out 2 nights ago while I was asleep. So I didn't pick one up personally. I had planned on picking one up. I think it was a 0.3 mint price, so reasonably high. What came with that, I believe, was you'll get a limited edition Ledger hardware device. I don't know which nano model it is, but ultimately it seems like more of a utility token outside of the hardware component. It seems like you're going to get a lot of access to collaborations and things that probably Ledger have coming down the pipe. I know that they have big ambitions, and I must admit, Ledger at NFT NYC put on a wonderful event where they had a couple of good sessions that were sort of in the vicinity of the 45-50 minute sessions that NFT NYC official sessions weren't. They were much more condensed, sometimes as low as 10 minutes. So I really enjoyed the sessions that Ledger put on and their activations at NFT NYC. I think you got a lot of really smart people at that company. So I'm actually going to be looking at OpenSea, probably each day over the coming weeks, just to see what the floor price is doing. It's 0.46 right now as we speak. Pretty healthy distribution too of holders. So out of 10,000 items, we've got 7,800 owners. I think maybe that floor price is going to be fairly healthy moving forwards, but it will be interesting too after whenever the cutoff is for the hardware device, whether someone lets go of their NFT for a little bit cheaper. I'm probably not that interested in the hardware device. I've got plenty of those already, but I'm certainly interested in the utility of this, what they call the Ledger Market Pass. So shout out to Ledger, who have already done 2,500 volume in just a couple of days of ETH in this particular market.
Very cool. So we've talked about Akatar before. There was a Time magazine cover, and it minted on OpenSea. You had sent me a message saying, they're minting, but I wasn't that interested in minting it. Can you explain that as well? I've been out of the loop the last few days.
Yeah, so I only saw this sort of briefly. I think Time Magazine's obviously been inserting themselves into the conversation through Keith Grossman for, probably 12 to 18 months now, and doing a really good job of, being part of the NFT community. And I don't actually have any of the Time pieces of the NFT collections that they've put out over the last 12 months. And I thought it might be something I would pick up, but I've got to say I was a little bit thrown back. And I want to ask you, Steve, too, from a technical perspective. I looked at the details on OpenSea and I saw that it was ERC 1155, but it was actually on an OpenSea storefront contract. And I couldn't figure out why they would do that other than it was a partnership with OpenSea and there's been some money injected into either Time or Akatar's. Do you think that my line of thinking is on point there?
100%. I've seen OpenSea open their Solana minting contract as well. They've had this contract. I remember one of the first actual NFTs I minted was Mad Cat Militia, and they used OpenSea storefront. It was meant to be this very easy to use store that you could put your NFTs into and mint from there. I don't think anyone's used it. I think Manifold's also created something similar, and a lot more artists use Manifold to mint. There would have been OpenSea paying or some partnership to have the NFT on their front page or something like that. An interesting one there.
I mean, talk us through the pitfalls, or what is the difference if I buy? I'm sure many listeners are thinking this, like if I buy an NFT that's on an OpenSea storefront contract, And it even says it on OpenSea that everything is centralized, right, opposed to decentralized. If you look at a lot of your NFTs in the details tab on OpenSea, what are the downsides of me owning an NFT like this Time Magazine one on the OpenSea storefront versus owning an NFTs, right, which is obviously an ERC 721? But can you sort of talk us through some of the subtle differences?
Yeah, I'm not sure what the differences would be. We know how quickly OpenSea are happy to delete NFTs or mark them as stolen and screw the buyer of an NFT. But I'm not sure what NFT OpenSea being the contract holder means. It might be, if you've ever heard of Nifty Gateway, which was one of the first places where I bought an NFT, and this is where a lot of artists were. Initially, they had their own contract, which was a Nifty Gateway contract, and all the artists actually minted from that contract. So just for, so my Beeple, for example, initially was a Nifty Gateway contract. So the provenance of that is Nifty Gateway, not Beeple's wallet. So that could have an impact going forward in time. And then, of course, the provenance of these will be OpenSea's wallet. But I know contracts were changed where you could still have an account. So it might be complicated. But then you've got other issues of where the images are held. Is it done on a decentralized thing like Artweave or IPFSS? I never get that right. But then in saying that, NFTs, because we allowed people to change their images, we're centralized in a way because we're still on an AWS server for our images. Our metadata is also on there. We will eventually move once we lock in everyone's. But yeah, I'm not too sure what the difference is there.
Okay, well, we might actually pose that question to Harry and Aaron from Team Divergence, who was recently acquired by Proof, but we have lined those guys up for a future episode. So they are some of the best in the business from a technical standpoint. And for those that remember the Moonbirds raffle, they were the two that were trying to stop as much botting as possible. So we might have to get very nerdy in some of our research, Steve. I've
got a lot of questions.
Coming weeks and months, and we'll put those questions to Harry and Aaron. So, Steve, speaking of Solana, you referenced Solana before. We saw Reid Hoffman, the founder of LinkedIn, of all places, your favorite platform, Steve, LinkedIn. We're trying to get Steve over to LinkedIn, but he is definitely showing some resistance. Reid Hoffman.
You got a better chance of me buying a Solana NFT.
Right. Well, speaking of Solana and Reid, so we actually saw some NFTs. Now, I'm not completely across, and I hope that I pronounce it right, but DALL-E, and I believe it's an AI-generated tool where you can essentially say, I want a picture of someone looking like they're on the phone call, right? And then it will, through AI technology, it will spit out RIP graphic designers out there. No, I'm just kidding. But it will spit out imagery based on the inputs that you give it. So it appears that Reid is gone into partnership with Solana. So speaking of Solana, and they're auctioning off a number of these images spat out by this AI technology as NFTs on Solana. Are you across this at all, Steve?
I saw a headline, but I have been looking at DALL-E 2 a lot. So I'm guessing Reid, I think it's Sam Altman that had been doing the AI stuff, and Reid would have been, I think, an investor in it as well. But it's absolutely amazing tech. You can be very specific about what you say for it to create. So you can say, create this in the style of this, doing this with this twist, and the outputs are absolutely amazing. And you've said, rest in peace, graphic designers. For a lot of work, that's true. So it was really interesting, and I can see this being the next sort of wave. We've had free mints. Now we'll have DALL-E 2 type mints, because you can say, create me 10,000 pieces based on this or that, and in seconds, you've got your collection. And then we know on Solana, you can put it up. It'll be barely anything to mint. And yeah, so I can see this happening over time. The question becomes, and I've seen this question asked a bit on Twitter, what's art? That's what the question becomes, because a lot of artists are now using DALL-E 2. So they're putting in prompts and then maybe changing a few things as well and then selling the piece. So I know Super Rare had a DALL-E 2 image that an artist put up there and sold. So this is going to bring a whole new question of what is art? Can it be made by an AI, or do humans need to be involved here? But just another piece of the puzzle with AI and tech and crypto and everything. And it's just really interesting to watch all this play out. I've been on the wait list to use this program for a long time, and I still don't have access. But I think they're opening it up to a lot more people very soon. So I'll be playing around with that for sure.
Very, very interesting. And looping back on what is considered art. I actually heard, we spoke about Damien Hirst just a few minutes ago, that the physicals weren't necessarily all painted by him himself. So I actually heard there's a team that essentially does that. So that was quite interesting when I heard that on a podcast. I can't remember which one it was, but my brain diverted to, okay, he's done that. He's the artist, right? To me,
in essence, he said, create this. And then someone else, which could have been a robot, but was his team, actually created it. And you're right. And now you can do that with DALL-E 2. So it's really interesting.
So luckily you did get that NFT. That seems much more original now, Steve. Damien Hirst.
Well, I hope so.
Okay, so I think we're going to wrap it up in a second. What else?
I've got one more.
Yeah, go ahead.
Sorry, last week we talked about Artifact Studios and how they seem to always do things to stuff up drops and mints and everything, and we had put this on our Twitter as well, talking about it. Of course, they stuffed up. Their website was overloaded. No one could go on there to mint, and if they tried, it failed. It was so crazy that at the end, people were posting on Twitter of how to mint from the contract, and a lot of people lost their NFTs because they followed some links. Even the owners at Artifacts were then saying, look, your only chance is to mint from the contract. Here's how to do it. Just ridiculous for such a big company to make a mistake this big again. I did end up minting all of my Clone X's into... so this was to get a Nike times Artifact hoodie. So I've got a few hoodies on the way. I initially had got all of them thinking, oh, well, I can sell half of them, pretty much break even and get some hoodies. But then the interesting thing was the claim period was literally a couple of days later and only went for 3 days. So then I ended up claiming them all. I'll probably give some away or hold some in storage as well. But just another example of these big companies that have taken in hundreds of millions of dollars, not load testing, not looking at their contracts, not understanding. And it's becoming an embarrassment because it happens every single time. So hopefully whatever the next drop is will be done a lot better. And they have put up their hands and said, sorry. But yeah, we'll see next time. I have no doubt something will stuff up again with one of these big drops coming up. But yeah, sorry, that was the big thing that happened over the weekend for me.
Yeah, and do you know what the total quantity, because I'm seeing on OpenSea for this hoodie that there's 461 total with a floor price currently of 0.18.
Well, they're worthless now. So apart from having the NFT there, so what happened, you got that token, there was 8,888 of those. I believe the mint price was 0.2. Then you had 3 days to go to their site and forge it. So that would then burn the original token and give you a new NFT plus the hoodie. So they might, and then eventually the hoodies have a RFID token in them, like you have on your credit card, and you'll be able to link that token to the NFT. So there'll be some interesting things there. And as we've mentioned before with utility, in the future, say you go to an artifact event, you can wear that hoodie and they'll be able to scan you in just with that token on the hoodie. So it's an interesting use of RFID and the NFT combined as well.
Okay. Let's give a shout out to World of Women. So I can remember I actually minted 5 World of Women around about this time last year. I think they turned 1 year old 2 days ago. So shout out to Yam and the team. Unfortunately, I paper handed 3 of them within about 48 hours, but actually bought one for my mum. She is still firmly diamond handing. So well done,
Awesome.
Mum. Rode the wave up, ridden a little bit down, but still up very, very nicely there. So shout out to the World of Women turning 1 year old. That wasn't necessarily the first women's PFP project, but there was it's probably the first one that gained
Not
traction.
done by Russians.
Yes, not done by Russians claiming to be females. So shout out to the Fame Ladies squad, but let's not drag them through the mud too much because they have turned that project around. I think it was Bex that took over that contract and project. So they've legitimized it to a degree after a really rocky start. So shout out to those female projects there.
There was another 1 year anniversary as well, Top Dog Beach Club. These guys are still working. The price, of course, it isn't great, but they have worked their asses off over the past year, and they did a lot of firsts in this space. So that's another really great project that's been working. Just because it didn't become a blue chip or anything like that, they're pushing the space forward at least and trying new things. So congrats to them as well.
Yeah, I think there's a lot of sort of 1 year anniversaries that are coming up for many projects that we were probably involved or had an eye on last year, Steve.
Yes.
I know actually Blazed Cats, which were a meme project of sending up stoner cats. Last year, they turned 1 year old.
I think Vugu as well. Vugu
Yes.
was in the last couple of days as well. That was one that I really thought was going to do really well and just hasn't as well. And that had a lot of hype at the time. I remember the gas was enormous. I managed to mint from contract and beat out a lot of people there. But yeah, it's crazy that it was a year ago that it was really the land rush of these 10K projects.
That's it. All right. Well, I think that is it for this week's show. Thanks again to Shane from CryptoTaxCalculator for joining us. And Steve, hope you feel better. You've got through the show, so we'll see you fighting fit back next week for episode 13.
Yes. All right. Thank you. And we'll see you next week.
See you, everyone.